Good morning, everyone. Happy Monday, August 19th, 7 a.m. here on the East Coast. Prices of Bitcoin currently at 10,720. It is looking fantastic in terms of this daily candle. Again, if you were part of the Cryptosomniac community, the Advantage membership, we had been trading this little sideways chop, shorting and longing the past few days. We closed out a nice long position I think a day or two ago, or actually Saturday, over here for a nice 7% gain, and then I shorted, my stop was hit, and then I placed another short. I closed out my short position right there with the 7% profit, and then I longed again yesterday around 10,278, and I just closed out my long this morning at 10,710 with a 30% profit. Okay, again, this is the 10x leverage, so that's why it's 30% profit for those of you who are not familiar with longs and shorts. Again, I will be doing a video on Bybit exchange, which is what I predominantly use now for longs and shorts. The reason being because so far I have not had any liquidity issues, no downtime I've experienced, anything as such. It's been a really great 2 weeks so far since I've been using that exchange, and I've only kept Deribit for my options trading and Bybit now for my leverage longs and shorts trading. Okay, so anyway, point is close out a nice healthy gain this morning. Now let's get the technicals, exactly why we got to that area, why I closed out the position and all that. All right, so let's go from the smaller time frames. Okay, so first things first, when we were in this chop right here, it was really easy for me to long below this red box and then short above this red box. Okay, and as we got closer and closer, this is where I started to go a bit heavier on longs than shorts, because ultimately what I was really wanting to do is break out this descending trend line. Okay, so what I did was I longed right here. Okay, this is exactly where I picked up my longs. Okay, and once I got on this bounce, again, if you don't understand technicals in terms of support and resistance levels, all right, go to cryptosomniac.com, do me a favor, all right, click on the products page right here, buy my technical analysis course. Okay, you will be able to learn all this in a few months if you actually just join us. Grab our course, come trade with us. Okay, none of this is investment advice, but the best we can do is teach you and educate you. All right, so the first thing, the way we draw out this zone is find critical areas where a lot of chop sort of bounces off a certain demand box, or say a supply box. So in this case, this is potentially support and resistance level, right? It bounces off this arrow, prices move up, finally break through, come to that same red box again, come down, break through again, come to that same area, bounce off of it again, break down, use it as resistance, and then finally when we broke on through, we were hitting this large descending trend line, which I'll show you in a second, but we came back to this area because really I was waiting for us to get close to this big descending trend line, this one right here. Okay, and so once we bounce off this area, I knew it was time to go long. All right, I didn't think that we were going to come down deeper again. And so when I went long, the reason I went long is because of this. All right, here is a multi-day, I guess almost a week and a half pattern that I was seeing at play. This is called a descending broadening wedge. Okay, if you don't know what those are, descending broadening wedges. All right, they kind of look like this. Okay, I'm gonna show you real quick. Okay, so they look like this, right? So price bounces once, twice, 3 times, 4 times. Typically, there's a pullback on the 5th, and then you break out. All right, in my experience, there's always a pullback on the 5th, and then you break out. So we have 1 touch right there, 2 right there, right? 3 right there, and 4th right there. And then we had a slight pullback, as you can see, right? After that 4th touch, if we zoom in a little bit, and then we broke on through. That is exactly, playbook right here for a descending broadening wedge. So for this entire time while we were in this, parallel channel movement, this uprising movement, I knew that what we were really looking for is the 4th touch. If we didn't get that and we went straight down, then this whole pattern is invalidated. Now remember that price doesn't have to make any of these patterns, okay? It's just sometimes common that if there's 3 touches already been like that, it could be more possible and probable that we will get that 4th touch. Remember, trading is about possibilities and probabilities laid on top of it. I had no idea it was going to do this because I don't have a crystal ball. No one does, right? But I just had a higher possibility and probability to know that it may possibly do this, and it did, and it pulled back and it went straight up. So it did exactly what I wanted it to do, but it didn't have to. That's the point, okay? Now, with that, I took the trades just as I saw them, like I showed you earlier, right? I took longs where I saw where it was fit and shorts where I saw it was fit. And then once it came really close to this big descending trend line, I went long, okay? And I pulled in a long right around 10,280, and now I'm up, good 30% or so. And I still have about 50% of my position remaining because my next target is up here. Okay, it's about 11.1 or so. All right, so I'm gonna mark that out for you, and we'll make that. Let's see. Actually, you know what? I'm gonna delete this. I'm just gonna copy this, clone it, and move this slightly up. Okay, I'm gonna remove this from months. Okay, so now we have that 11.1 target. Now you're probably wondering, okay, why that target? All right. Now, just like this red box right here, this area right here was previous resistance, as well as this, big wick that we hit once, basically twice right there, 3 times right there as well, right? So right around, say, $100 range, we hit this area 3 times before finally collapsing through, right? So once right there, twice right there, 3 times right there, as you can see. And once we finally broke on through, now I expect the same area to hit us as resistance. So anywhere between 11,000 and 11,200, I'm almost certain that that will be a decent amount of resistance. Probably really strong, and something that we may not be able to get through on the first go. All right, so what I see happening is something like this, okay? Also, if you look back on the fibs, all right, so if we go like this, from this top to this bottom, I want to show you exactly where that, between 50 and the 618 line up. Notice that it lines up around this red box, around this target that we see. So typically on the last few runs, Bitcoin has gone up to about the 786 fib from the top to the bottom and then back up. And I'll show you that in a second what I mean. All right. So at the very least, we can expect targets between 50 and the 618. Because typically the golden pocket, which is the 618 Fibonacci ratio, is oftentimes where the price either catches as support or catches as resistance. So you can see not only does the 618 fib line up right there, but also the previous area that was support, which will now more than likely be resistance. So now let's go back on the daily and show you exactly what I mean. Okay, so here we are. All right, I want to pull this from this top to this bottom right here. All right, and I want to show you something. From this top to this bottom, look where price went up. It went to the 786 fib, right? Went just past it. But mostly the price closed right around, just a bit higher than the 618, correct? All right, so let's try that again. So from now this top to this bottom, look where price went up. Hit the 786 perfectly. But again, it would have been safe if you got out of, between the 618 and the 786. All right. So if that's happened the last 2 times, again, I don't expect the 786 to be hit perfectly, but I do expect the 618 at the very least, or the 50 to hit perfectly. All right, somewhat perfectly. Now look from this top, all right, to this bottom. Where does that 618 line up? 11,275, and that 786 lines up to about 11,765. Currently, we're just getting towards the 50 fib. Okay, we haven't even reached there yet. We're actually trying to climb successfully above the 382 fib. So now you understand why I've set up my targets around the 11.1 range, okay? Because it's much safer to be getting out of there right before that 618 fib. And if price is successful, it will not only break above the 618 fib, but it'll break above the 786 fib, and I will feel much safer going long above that. Okay, or I can just hold on to some of my position and move my trailing stop loss, right? All right. Beyond that, what I was also confident about is this, okay? Two things. First of all, ascending trend line that comes to touch price once, twice, 3 times, and now 4 right there, okay? Since May right here. This is the first point right here in May, second point right here in June, third in July, and then the fourth we got in the middle of August. So I knew for the most part that this trend line is reliable. Also, that on the daily chart, last time we turned around, we had a nice 3-day, doji-like movement for, 3 straight candles, 3 straight bars, and then we reversed and pushed on up. That's basically what happened right here. We did it for 4 days. Each one of the candles was looking better and better because the candle spread was, the wicks did not dig in as deep. They kept going higher and higher. The bodies started to close higher, except this one 2 days ago. But again, it's still kept in form in terms of this larger, wicks are increasing to the upside, right? They're not digging in as deep, meaning that the sellers are just not interested in selling here, and the buyers are willing to buy up anything that drops in this area. So what that tells us is that we feel safer getting into longs here rather than shorts. Now again, price doesn't have to do anything like it did previously, or it doesn't even have to give a crap about this trend line. Okay, lines don't mean anything, right? But statistically and in terms of possibilities, they have been favorable. So all we can do is sort of look at these possibilities and probabilities and say, you know what, if it's held this many times, chances are it could hold again, right? Chances are that it could bounce again and we could go back to the top of this descending trend line, this big descending flag parallel channel. And that's exactly what happened, all right? So if you're truly looking for getting back into longs, you want to wait for a daily close above this marker right here, this 10,365. I mean, obviously, we're already $350 up beyond that. I'm pretty sure we'll close up here, but just in case you want to be sure that should I get into longs, you may want to wait for this daily candle to close. I've already gotten my signals that I needed in terms of my technicals, that in this descending broadening wedge, this pullback on the descending broadening wedge, the tests of support that I showed you earlier in this area right here, the support test. So I had multiple signals in terms of price action as well as volume telling me that it's go time, it's time to go long, right? And that's exactly what I did. So now we need to wait for this area to hit about 11.1, 11.2 to see how it reacts. If it can't get back above that area, who knows, it could pull back a little bit more. Again, this is something that I've seen over and over again. After multiple touches to the top of this descending trend line, what will typically happen is, you'll have a movement like this. You'll probably hit this again. We'll pull back just a little bit. People think we're going to go down. We're going to go to 8,000, 6,000, 4,000, something ridiculous. And then it'll just surprise the crap out of everybody and then just go straight up like a rocket, okay? This is playbook. This is patterns that have been researched and reviewed and statistically laid out. What is the more probabilistic outcome, all right? And these are the patterns that I've studied for a long time. And if you want to trade based on technicals rather than your own gut feeling or how you think crypto Twitter is thinking, then come join our community, all right? Come join Cryptosomniac, come trade with us in terms of learning technicals, which again are applicable to any market, whether it's Forex, whether it's the stock market. And again, folks, we have Forex chat right here. We have the stock market chat. We're pretty busy in it, as you can see right here. You can see tons of reports, tons of different calls that our other analyst is taking, right? Again, none of this is financial advice, but we do have a lot of experience in trading, and we try to share that experience, share that knowledge as much as we can. All right. So now let's go back to the volume. Okay. One thing I want to add on is the volume. You can see now that the volume is starting to pick up again. Okay. This volume bar, though, is a doji, picked up somewhat high. Now we need to see how this volume bar looks. Okay. So if this volume bar does move up nicely in terms of volume as well as the candle spread, this will be a really good sign. All right. If it's just very very low volume, and it looks like the candle is going to close under this 10,365 level. That means the sellers are still high in this area. Okay, then I personally wouldn't feel safe longing just yet. But again, the odds are that the longs are more favorable in this area. Okay. Not only that, one thing I missed is notice how this white dash trend line, which is the equilibrium of this big flag, also was in the same area. So we had confluence of three different factors. This doji spread right here that looks similar right here, because this is basically reaccumulation right here that's happening. This trend line that we used to bounce price off of, and this descending parallel channels, this flags EQ line right here. And one more thing I want to show you is this right here, the 100 moving average. The 100 moving average has been very useful in the 2016 entire run up. Okay, and I'm going to show you that right here. This is our Bitcoin analysis channel. This is where I put out all the analyses that I like to show people exactly what I'm seeing. I give clear directions, as you can see, multiple updates through the day, and let people know exactly what I'm seeing, why I'm trading certain areas, and you know, maybe why you can consider it. Here's the 100 moving average, the yellow in the 2016 run up. Let me see if I can make this bigger. Okay. This is from 2016, this entire bull run to 20,000 for Bitcoin, as you can see, right? Notice this yellow line, this is the 100 moving average. Okay, once it became support, you know, pretty much support all over here, support, all the way up, okay, until it just went parabolic and just didn't even care about the 100 moving average, right? So the point is that we hit that same 100 moving average again, something that we haven't done since the start over here in March. All right, so this is a very critical area for price to bounce off of, and I'm really glad it did. It respected this line, this moving average. Okay, again, historically this has happened, doesn't mean it has to, but again, statistically this should have happened, and it did, right? So it was a perfect trade for us to take based on multiple time frames, multiple confluences of technicals. All right, okay, now on the weekly chart, again, we see a very strong rejection by the bulls from going back anywhere close to the closing of these candles right here on the weekly, right? So all this wick right here that you see, this is the bulls saying, no thank you, we're not going to come down here, we're going to buy up everything. Right? And then obviously over the last few hours, you've seen a nice strong movement on this weekly candle that has just started about 12 hours ago. So again, if you want to be truly safe, all right, on the weekly chart, you want to wait above these candle closings right here. So about, let's just say 11,700. If a weekly closes above that, then I personally think that it's the greatest time to go long. All right, not financial advice. I'm just saying that it's a level to look out for, because it's this white box has plagued us in not allowing us to cross and close candles above it. So I wouldn't be surprised if 11.7 closes, then the next levels are easily 13,000, 14, 16, and then 19. All right, and then obviously beyond that, I don't know, I'm sure we'll get to like 24,000 or 25,000, but we don't need to think about that just yet. In terms of just the next, few weeks, that's what I'm actually foreseeing. Okay, if we can close above 11.7. All right. Let's see how Ethereum is doing. I've been in an Ethereum trade for a little while, but again, I'm not super concerned, because I do like Ethereum for the long term. I don't mind holding on to it a bit longer, because its upside potential is much larger than Bitcoin's for now, in terms of just breakouts like 2016 or 2017. Ethereum had basically double or triple the gains of Bitcoin, and I'm not saying that it has to happen the same again, but I do like it as a platform in terms of fundamentals and in terms of technicals. Ethereum did break down from this ascending trend line right here. One thing I'd be careful about, folks, is this white line, once price reaches up to it, about $210 to $215, is probably going to be resistance on the way up. And same with probably this line right here, which is about 225 to 230. So be careful if you're, longing up here in this area, just because you think that, hey, this is it, we're going to keep going up. Remember, we're facing a lot of chop, a lot of resistance here. Again, statistically, it's probably better if you want to open a short here, but if it breaks through, it's fine. You can then flip long if you want, right? I would say the next resistance for ETH beyond that is probably around 250 or 245, somewhere around that area. So a lot of resistance ETH has to get through, all right? So do be careful on that. The RSI on both the smaller and the larger time frames, like the 1 hour right here, 1 hour is hitting the overbought territories, but the 4 hour, I think, still has a lot of room to go, as you can see right here. The last time the 4 hour hit overbought was way up here, and price came all the way up to about 12,200. So if the RSI gets to the overbought territory, I wouldn't be surprised if it gets us towards that 11.1, 11.2 marker. Okay, and the daily time frame, again, this area right here, whenever price comes down to this 41 point range, the RSI does tend to turn around on the daily time frame. So I've laid out that 41 points right here, as you can see, this line. So it's a very successful bounce. Now I'm hoping we can keep on moving up instead of just creating lower highs like we're seeing right here, lower high, and then lower high. All right, so let's hope price can move on up successfully. All right, so I've showed you volume analysis. I've showed you the different time frames, why I got into longs versus shorts. If price does struggle around 11.1, 11.2, again, I may actually go short, probably close out my long position there, and then sort of maybe see if I can wait out the bleed, or if it's a pullback on low volume, and then I'm gonna probably go long around this area if it touches this trend line again and bounces off like this. I'd feel really good about going long again if we bounced off this trend line, or if we just pull back slightly and then pushed on up. Okay, so you can also just wait above this descending trend line. A daily close above this area will probably be your safest bet to be able to go long. All right, again, folks, I just want to keep this analysis short and sweet. Come join the Cryptosomniac community. As you can see, tons of updates, all kinds of information that you could use for your own decisions. That's really all we do in our community, is inform people as much as we can, make sure that people don't make mistakes, don't FOMO. And sometimes the best thing that we can do for y'all is save you from yourself, meaning that save you from your own mistakes, right? And sometimes you do need that, right? You do need that from people who have been trading for a while, who have, like myself, I have a course that exactly details and explains why I'm trading certain technicals, how to use the fibs, and how to use volume analysis, how to use the RSI and the MACD, and draw horizontal support and resistance lines, how to draw diagonals and channels, all kinds of fun stuff. All right, so trading really just does become an art form. It becomes a game once you understand exactly how to trade, how to wait patiently, and really the most important, trading becomes fun when you realize that it's nothing but a mind game. Okay, it's a game of mental fortitude and patience, and those with the best amount of mental fortitude and patience, and those who properly manage their risk and don't get too greedy, are the ones who ultimately win in the long run. Okay, all right, folks. Let's see. I think that should wrap it up. I just want to do a quick analysis. I don't want to go too much into it. Let me see this chart right here. Again, we're still in this big sort of regular flat correction that I'm still seeing. Let me show y'all right here. Whoops, I don't know what's going on. There it is. All right, so we're still in this big wave count right here, right? So I think you could make the argument that this is 1, 2, 3, but this can't be 4 because it really just dug into wave 1. But this could just be a big sort of wild movement that we're seeing from Bitcoin without proper Elliott wave structure. Remember, Elliott waves are not the end-all be-all of technical analysis. They don't have to. Not all movements have to work out exactly like Elliott waves. It is really just more so one theory, one guideline compared to the thousands of others that many people have developed. Okay, but I do like using Elliott waves, but in this case the count was not working out. All right, so we just move on to other technicals and see if they fit. All right, so anyway, folks, I think that wraps it up. Maybe also consider this area right here, which is also resistance, due to the fact that you see these green circles right here, circle 1, 2, 3, 4, 5, all moving along that white trend line. Okay, they were previous support or resistance, so I wouldn't be surprised if it hits as resistance right here as well. And then we pull back a little bit, maybe to about 10.6, 10.5, and then push on up, if we're supposed to push on up, that is. All right, and also again, you can see on the 4-hour chart, notice how this white trend line right here is visible and showing you that this area is again going to be resistance on the way up, because it was previous resistance. Once it broke on up, it was support, 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 and then finally broke through. So once it comes back up, this area is going to be resistance, and this area is going to be resistance. All right, alrighty, that's it. I hope you guys enjoyed this analysis. Come join Cryptosomniac. Technical analysis course right there. Join the Advantage membership if you want to come trade with us. As you can see, we're making some great gains. You can go to the gains reviews channel right here and see all our gains from people who have found our information useful. That's it, folks. All right, kick some butt in the market, and I'll see y'all soon.